Welcome to Planet Crypto Today, your channel for news related to the world of cryptocurrencies. California financial regulator shuts down Silicon Valley Bank. Circle may have exposure of over $9 billion in Silvergate and Silicon Valley Bank. Major stablecoins lose parity with the dollar. Biden's tax hike. Coinbase and BINANCE have temporarily suspended USDC conversions as the dollar peg wobbles. California financial regulator shuts down Silicon Valley Bank. Circle may have exposure of over $9 billion in Silvergate and Silicon Valley Bank. Major stablecoins lose parity with the dollar. Biden's tax hike. Coinbase and BINANCE have temporarily suspended USDC conversions as the dollar peg wobbles.
If you like the video, subscribe to our channel and don't miss a single video. Don't forget to give it a like and share it.
California financial regulator shuts down Silicon Valley Bank. Silicon Valley Bank, one of the main banks for startups and technology companies in California, has been shut down by the state's financial regulator. The California Department of Business cited an unsafe and unsound condition of the bank as the reason for its closure. The regulator's decision has affected dozens of technology companies and startups that had deposits in the bank. The affected companies have been instructed to withdraw their deposits and look for new banks to conduct their financial transactions. Silicon Valley Bank has been a major financial player in California's technology community for many years. The bank's closure has raised concerns among investors and entrepreneurs who fear that the lack of suitable banking options could hinder the growth of technology companies in the region. The California financial regulator has assured that it is working to ensure that the bank's customers' deposits are returned safely and quickly. This closure demonstrates the need for technology companies and startups to have contingency plans to address unexpected situations that could affect their financial stability. Circle may have exposure of over $9 billion in Silvergate and Silicon Valley Bank. Throughout the night and early morning, with confirmations from Circle, a cryptocurrency payment processor and issuer of USDC, regarding its exposure of more than $9 billion in U.S. banks. The company has revealed that it has a total of $25.8 billion in deposits in U.S. banks. However, only a portion of these deposits are insured by the FDIC, meaning Circle may be at risk of losing a significant amount of money if one of these banks fails. Circle's exposure to U.S. banks has concerned some investors and analysts, who fear a possible bank failure could have a ripple effect on the company. Circle has defended its banking practices, stating that it uses a series of security mechanisms to protect its deposits. The company has also indicated that it has a contingency plan in case one of the banks it has deposits with experiences a failure. Despite this, some observers have expressed concern about Circle's exposure to banks, especially given the size of its deposits. Circle's situation highlights the risks faced by cryptocurrency companies when relying on traditional banks for their deposits and transactions. Major stablecoins lose parity with the dollar. Over the past few years, stablecoins have gained great popularity among cryptocurrency investors and traders. Among the most popular stablecoins are USDT, BUSD, USDC, and DAI. However, recently, these cryptocurrencies have suffered a significant drop in value, leading many to wonder if these coins are really as stable as supposed. As we reported in the previous news, the closure of Silicon Valley Bank has been the final trigger for stablecoins to lose their parity with the dollar. This has caused panic, and some stablecoins have lost 10% of their value due to its exposure to Silicon Valley Bank. There have long been doubts about the true stability of these coins. Stablecoins are supposed to be backed by real assets, such as US dollars, although many investors have wondered if this backing is truly sufficient. Additionally, there have been concerns about the lack of transparency in the backing of these coins, which has led some to question their validity as a stable alternative to volatile cryptocurrencies. Biden's tax hike, what it means for Bitcoin and the wash sale rule. U.S. President Joe Biden's proposed tax hike could affect the way Bitcoin investors report their losses, particularly with regards to the wash sale rule. The wash sale rule prevents investors from claiming losses on assets sold for a loss if they buy a substantially identical asset within 30 days of the sale. Under the proposed tax hike, the rule would apply to cryptocurrencies as well. This means that Bitcoin investors would have to wait at least 30 days after selling their coins at a loss before buying them again in order to claim a tax deduction. The tax hike proposal is part of Biden's plans to fund infrastructure projects and social programs, and has been met with mixed reactions from lawmakers and investors alike. The potential impact of the tax hike on Bitcoin investors remains to be seen, but it highlights the need for caution and attention to tax regulations in the crypto space. Coinbase and Binance have temporarily suspended USDC conversions as the dollar peg wobbles. The news comes after Silicon Valley Bank, which backs several stablecoins, closed its accounts. This has raised doubts about the true stability of stablecoins and led some to lose value. USDC has lost its dollar peg and dropped up to 10% on some markets. Crypto platforms have been forced to take measures to protect users from potential consequences. Coinbase said it will temporarily suspend purchases of USDC with credit and debit cards, while Binance has suspended conversions to USD. The uncertainty around stablecoins highlights the risks of relying on digital currencies backed by traditional banks.
If you liked the video, subscribe to our channel and don't miss a single video. Don't forget to give it a like and share it with your family, friends, or enemies on your social networks.